Joining me now, we've got Brian Vendig, who is the MJP Wealth Advisors Chief Investment Officer. Great to have you back on the program with us. You say your main message for investors right now who may be, kicking around some ideas even over the dinner table come Thanksgiving is to stay diversified. So that is what my plate is going to look like come Thursday. But what about on a portfolio basis? What does that look like?
Thanks, Brad. Great to see you as well. I think, look, it's classic to say stay diversified, but I think it's because we've seen over the course of the year a very small handful of stocks contribute significantly to the overall market returns. And it's only really been over the last half of the year have we seen some broadening out in some other traditional value sectors outside of mega cap tech. And so I think as we look into next year, and recognizing that there is a little bit of a push-pull between the mosaic of some different policies that could come out under the new administration, I want to make sure that investors are not overpaying for growth and making sure that they're looking at other areas outside of mega cap tech that have growing earnings and lower valuations, and again, making sure that we're staying balanced from a risk point of view.
And so is that risk on? And if so, in what areas of the market right now would you be identifying those opportunities?
Well, when we look at earnings forecasts for next year, Brad, we definitely are having a more risk-on posture because earnings are expected to grow over 10% year over year. And again, tax cuts, deregulation, and obviously if some of these policy decisions don't go to extremes, I think that is still positive for overall stock market. And from areas that we're saying investors should be focusing on, look at industrials, look at cyclical sectors of the economy that are supported by the expectations of interest rates being cut over the next year or so from the Fed. And at the same point in time, I'm not saying abandon tech, but I'm just saying being very selective on where you're going to invest in the space, because when troubled waters and concerns start to impact the markets, it's usually those sectors that have run up the most are the ones that are going to sell down the most and leave the markets more into a correction. So again, just being sensitive to risk allocation and posture as we kind of move through the next couple of months, which still are going to be very uncertain as some of these policy decisions come out from Washington.
We've seen some of the overall outlooks from banks and the largest institutions start to come out over the past several days now, and we're seeing perhaps this kind of average out of about 6,500, 6,600 is some of the big calls that have been out there for the street. What are you anticipating in terms of the S&P growth factor and what's really going to drive that narrative for a lot of potential investors out there who are looking for just that next major theme that this market can really propel based on?
Yeah, I mean, I think the themes going into next year are going to be, again, supported by, is the economy going to continue to chug along with expectations of growth anywhere between 2 and 3% next year? Is the consumer still going to be healthy and spending, even though consumer has been selective on price? I don't think that theme is going to change anytime soon. And making sure that the labor market is stable so wages are exceeding overall inflation numbers for next year. And granted, earnings, as I said before, is a real support for the overall market and valuations that are getting to those S&P projections for next year. Obviously, the biggest risk to all that are policy mistakes. Policy mistakes that can come from the Fed regarding timing of rate cuts and policy decisions there. And plus, as I said, the extreme examples of tariffs and immigration policies, which could be a negative to the economy as compared to deregulation, lower taxes, and other ways to balance spending, moving forward.
How are you balancing some of the mega cap tech versus small caps right now?
Well, we are constructive on both in the sense that, in our portfolios, we have a foot in the direction of growth. And the AI trend is still going to be one that plays out over the next 5 to 7 years. If you listen to some of the comments that were made last week on NVIDIA's earnings call, that definitely supports that those trends are still in place. However, on the small cap side, the fact that we do have a belief that the economy is not moving into a recession, and the lower interest environment should help smaller caps, especially being domestically focused companies. We still like that as an opportunity to get some upsized growth over the course of the next 12 months because they really have been quite a lagger from an asset class perspective over the past 10 years.
To what extent does a diversified portfolio, where we started off the conversation and have continued the thread, to what extent does that also contain crypto?
Well, look, I think crypto is something that we've seen with, coming off the election and the animal spirits being released because of the expectation of lower regulations, more adoption, especially, with changes in leadership, as we've seen in the regulatory space and some of Trump's appointments. I think crypto, for those that want to speculate, because I still believe it is a speculative investment, it might be about 1 to 3% of your overall liquid portfolio. And that's a conversation that I think an investor should have with their advisors, as well as research for themselves before just jumping in because of this momentum trade that we've seen in the short term. But the other part, Brad, that I just want to hit on that real quick on diversification is don't forget about bonds. We spent a lot of time talking about equities and crypto, but with interest rates coming down, bond prices going up, and getting some really compelling tax equivalent yields, especially in the muni space, those could be some things to talk about around the dining room table on Thanksgiving as well, Brad.
Brian Vendig, who is the MJP Wealth Advisors Chief Investment Officer. Brian, great to have you here. Thanks for taking the time this morning.
Thank you, Brad.